Assalamualaikum to our lecturer, Dr. Haji Shamsul Anas Kasim. We are from RBA 2435B. We present about company review and strategy plan assignment. So, for this assignment, we have chosen Kuala Lumpur Kepong company to review. Before that, I would like to introduce myself and the other group members. My name is Muhammad Adam Aiman, and for my group members are Ifah Shasha, Balkis, Nur Farah Izrin, and known as Rina. Kuala Lumpur Kepong was established in 1906 in Ipoh, Perak, which is their location of headquarters. The company is known for plantation of oil palm and rubber trees, manufacturing of oleochemicals, which is generated from palm oil, into several products such as home and personal consumer staple goods. After that, they also produce cloth products which are made from rubber, as they have rubber tree plantations. This company has developed at least 297,983 hectares of oil palm and rubber tree plantations across Malaysia, in Peninsula and Sabah, Indonesia in Belitung Island, Sumatra and Kalimantan, and Liberia. Besides, Kuala Lumpur Kepong also has developed its property development in Peninsular Malaysia, such as in Sungai Buloh, Bandar Seri Coalfields, and other areas in Selangor in 1990 until now. The vision for this company is to become a premier global business that provides lasting value to all stakeholders. For mission, they aim to offer high quality goods and services at reasonable cost, acting as an honorable and conscientious corporate citizen, maintaining consistent dividend payments and sufficient dividend cover, and earning a reasonable return on investment. And next is maintaining expansion through the reinvest earning, upholding strict standards for corporate ethics and conduct, and the last one is upholding social obligation in the neighborhood where the business is conducted. Next is organizational culture or values in Kuala Lumpur Kepong. The first one is teamwork, which is overcoming divisional, functional and geographic borders in order to achieve shared objectives. The second one is integrity, which ethical leadership with a strong sense of morality that motivates everyone to act morally. Next is innovation, which is advancing their fresh thinking and ongoing development to continually go above and beyond expectations. And the last one is loyalty, which is dedicated to working together to create a brighter future marked by a mutual respect and care, while maintaining the company's interest as our own. As for board director of Kuala Lumpur Kepong, the chairman for this company is R.N. alias Tan Sri Datuk Sri Lee Oi Kian as Chief Executive Officer, followed by Datuk Lee Hau Kian, Datuk Yus Fan Khon, Tan Sri Azlan bin Muhammad Zainal, Wah Ho Kiat, Ani Rodriguez, Lee Yazang, and Cheryl Ho Hui Eng.
Assalamualaikum and hi, my name is Ifah Sharada binti Mazlan. Today I would like to present about SWOT, IFE, EFE and CPM in Chapter 2. We go through about SWOT first. S, which stands for strengths, are the resources and skills that the company can employ to create, maintain and grow a competitive edge in the market. These are the strengths of KLK. The first one is diverse revenue models. Second is high margins, and next is talent management. So we move to W, which stands for weaknesses. Kuala Lumpur Kepong's weaknesses might either be its shortage of strengths or the lack of resources or capabilities. The weaknesses in the Kuala Lumpur Kepong SWOT analysis are as follows: pressure of gross margins and operating margins, manpower constraints, and low investment into Kuala Lumpur Kepong's customer-oriented service. For the opportunities, any brand has the potential to improve in certain areas to grow its customer base. The opportunities in the Kuala Lumpur Kepong SWOT are increased government regulations, accelerated technological innovation and advances, and trend of customer migrating to higher-end products. For the last SWOT is traits. Traits are factors that have the potential to cause harm to an organization. There are few traits that may stall the KLK company, which is saturation in the urban market and stagnation in the rural markets, changing demography, changing political environments, and competitors catching up with the product development. So we move to IFE. Internal Factor Evaluation, or known as IFE metric, is a strategy tool used to evaluate firms' internal environment and to review its strengths as well as weaknesses. Based on the table below, the total weight score of IFE metric for Kuala Lumpur Kepong is 2.73. Since the total weight score is above the average, which is 2.5, it shows that the company or business has a strong internal positions. Next is External Factor Evaluation Metric, or EFE. It's a strategy tool used to examine companies' external environment and to identify the available opportunities and threats. Regarding table below, it shows that the total weight score of metric for Kuala Lumpur Kepong is 2.95. The value is above average total weight score of 2.5. Therefore, the company or business of KLK has done a pretty good job where they take the supremacy of external opportunities and keep away from external threats that the company is facing. Other than that, we use Competitive Profile Metric, or CPM, to compare themselves to their competitors. For the product and service variety, the competitor company Genting Berhad has a high score, which is 4, compared to KLK with 3 score. From both companies, it shows that Genting Berhad has more product and service variety compared to KLK. For financial position, Kuala Lumpur Kepong received 3 score compared to Genting Berhad that received 4 score. It is because Kuala Lumpur Kepong has a current ratio which is 2.04 compared to Genting, which has a current ratio of 2.95. It means that Kuala Lumpur Kepong has low current assets to cover its current liabilities of their company compared to Genting Berhad. For geographic coverage, Sime Darby received 4 score compared to Kuala Lumpur Kepong, which received 3 score. Sime Darby has conquered many areas for its businesses such as industrial, motors and healthcare in Malaysia, Australia, Brunei, China, Hong Kong and other countries. For corporate social responsibility, Kuala Lumpur Kepong received the highest score, which is 4 scores compared to Sime Darby, Felda Global Ventures and Genting Berhad. For community, KLK has provided education for communities such as KLK Community Schools in Sabah and also supporting ID educations to SMK Simpang Pulai. For the last part, which is the profit margin, Genting Berhad received a higher score, which is 4 compared to KLK, which is 3 scores. Overall, Genting Berhad is the strongest competitor company with 3.67 total weight score compared to Kuala Lumpur Kepong with 3.16 total weight score, followed by Sime Darby and Felda Global Ventures with total weight score of 2.47 and 2.44 respectively. Therefore, Kuala Lumpur Kepong has to find the more strategic plans in order to improve and develop its company in terms of product and service variety, financial positions, geographic coverage and profit margin, so that the company can beat the rank of its competitor company in the industry such as Genting Berhad. So I think that's all from me, and I will pass to the next presenter.
Assalamualaikum to Dr. Syamsul Anas Nasim and to our fellow friends. I am Malti Abdul Somad from RBA 2435B. Today, I would like to present about the company's strategic plan of Kuala Lumpur Kepong Berhad. Ladies and gentlemen, let us take a look at the strategy formulation in Stage 2. In Stage 2, we have 4 types of matrices that are used to determine the best strategies that should be pursued by Kuala Lumpur Kepong in order to develop its company to be a better one in many perspectives. The first one is SWOT matrix. SWOT matrix is an important matching tool that helps managers develop 4 types of strategies, which are strengths opportunity strategies, weaknesses opportunity strategies, strengths threat strategies, and weaknesses threat strategies. Based on the SWOT matrix, market penetration strategy can be used for Kuala Lumpur Kepong in widening its market share by promoting its products or services using online marketing regarding WO strategy. Besides, the company should increase its market areas regarding WT strategy by selling its existing products or services to new geographical areas in terms of market development. It not only will increase their profits, but also it will increase their target market. In addition, regarding ST strategy, the company can develop a variety of new products of product mix that suit a variety of customer demands in terms of product development. Ladies and gentlemen, on the next slide, it shows the strategic position and action evaluation matrix, or known as SPACE matrix. As shown in space matrix, Kuala Lumpur Kepong should pursue an aggressive strategy which needs them to choose either to do backward, forward, horizontal integration, market penetration, market development, product development, or diversification, either related or unrelated, for their company or business development. Now, let us move to the next one, which is internal-external matrix, called as IE matrix. The total weighted score for IFE matrix is 2.73 on x-axis, whereas the total weighted score for EFE matrix is 2.95 on y-axis. According to the figure, both values have been plotted on the chart and it falls into cell 5. From there, it means that Kuala Lumpur Kepong is managed best with the whole and maintain strategies such as market penetration and product development. Ladies and gentlemen, this is Boston Consulting Group Matrix or BCG Matrix. Based on BCG Matrix, Kuala Lumpur Kepong is located in the division of Quadrant 1, which is question marks, where the company have a low relative market share position, but then they compete in the high growth rate industry. In this case, this group has to decide whether to strengthen their company by pursuing those intensive strategies in market penetration, market development, or product development, or else to sell the company. Ladies and gentlemen, after we have done all the 4 matrices, there are 3 best strategies that we choose for Kuala Lumpur Kepong, which are market penetration, market development, and product development. These strategies are the best one among others, as it will help Kuala Lumpur Kepong to increase its profits by developing new products, increasing its target geographical areas, and enlarging its market share by adding extra effort in promoting its products through online marketing on every social media and other related marketing strategies. Now, let us move on to the stage 3 of strategy formulation, which is Quantitative Strategic Planning Matrix QSPM. Based on the slide, it shows that Kuala Lumpur Kepong should pursue in product development as it achieves the highest total attractiveness score in QSPM compared to the other 2 strategy alternatives in order to increase its profit and even to highlight its company to the eyes of the world. That is all from me. Let me pass to the next presenter, Noni Shrina. Thank you.
Hello everyone, my name is Nuni Shrina binti Muhammad Nasir. Strategy implementation is a very important for every company as they need to improve on something that they have lack of. So I will explain the 3 types of strategies that can help Kuala Lumpur Kepong improve the company, which are market penetration, market development, and product development. In terms of market penetration, KLK can implement a competitive pricing strategy and lower price of product to increase the demand and sales of oil palm products. It is due to the fact that the demand for oil palm is expected to increase. Hence, KLK will have the advantage from offering lower price of oil palm products than other competitors, which will increase the numbers of customers and sales. In a strategic partnership, the partners maintain their independence, share the rewards and risks of joint action, as well as the control over them, and continue to make strategy contribution. For example, in terms of research and development, KLK company can collaborate on R&D projects to improve oil palm agriculture practices, seed quality, disease resistance, and yield optimization. When collaborating with the company's supply chain, it may increase traceability, promote ethical sourcing, and improve management of the effect on both the environment and society. For market development strategy, Kuala Lumpur Kepong will gain benefits from geographic expansion, where they can generate revenue and discover a new group of customers for its business activity. For example, KLK company can expand its operation into other locations such as Sarawak, because the state requires an oleochemical industry. Moreover, broaden its marketing campaign using a digital platform may help a Kuala Lumpur Kepong company increase sales and reach new customer. KLK may use Instagram, Twitter and Facebook to promote their brand and products. A Kuala Lumpur Kepong company may use social media marketing to provide information and communicate with customers. Not only that, by enhancing their marketing campaign such as its website, also can influence their audience to focus on company business activity and core value. Lastly, for product development, it is suggested that KLK develop product mix and create a high-quality product. This will assist the company in fulfilling customers' need and influence the company's success. Product mix is frequently the focus of businesses with broad product lines. KLK can examine clients' wants by concentrating on product mix so they can add some new products to the line. So businesses can better meet client requests with its assistant. Furthermore, KLK must establish a quality management system in order to create high-quality products. A quality management system is essentially a set of internal guidelines that the company develops and then maintains too, in order to help guarantee the quality of the products.
Assalamualaikum warahmatullahi wabarakatuh. My name is Farah Izimit Abdul Jalil and I'm going to conclude on this company review and strategic plan of Kuala Lumpur Kepong Berhad. First, we have expectation of the new strategies. According to the table shown, after implementing all three strategies that we have already chosen, which are market penetration, market development and product development, the internal factor evaluation IFE, external factor evaluation EFE, and competitive profile metrics have increased. In other words, all three tactics chosen benefit KLK. This means that Kuala Lumpur Kepong will be able to compete with other competitors if the plan are properly implemented and the company continues to expand in the sector. Next, we proceed to the importance of new strategies. Choosing and implementing the best strategies for a company is crucial as it acts as the basis for all major decisions made by an organization. It provides general direction by developing plans and policies to attain goals and then allocating resources to put the plans into action. For market penetration, the importance of this strategy is that it will assist in increase of sale, exposure of goods and services, and also developing a good strategy. For market development, it also helps in increasing the company's sale and revenue and also allow them to stay competitive and gain access to new sources. It also helps in selling more of an existing product to an existing market. Lastly are the importance of product development, which are existing businesses to stay ahead of competition, build a stronger relationship with customers and increase their profitability. Product development also involves creating new products for existing markets. And now we proceed to the conclusion and recommendation. According to the company's financial analysis and the internal and external assessment of the company, it has been determined that Kuala Lumpur Kepong has significant growth potential. By displaying a strong financial position, the company was able to convince financiers to supply the debt leverage required for expansion. As we manage through the challenging market conditions, KLK is persistent in its commitment to consistently improve its involvement with internal and external stakeholders, along with its overall sustainability performance. The objectives described in this article are in sync with the company's long-term goals of being a premier global firm that generates long-term value to all stakeholders. Because the competitors have paved the way for foreign involvement in the countries, the existence of the company's primary opponent there may aid in furthering its market penetration. They want to improve the quality of ESG data and the strategies they use to collect data throughout the supply chain in order to acquire a more comprehensive perspective of sustainability performance. This will allow them to make more informed decisions about the company's future and the environment's well-being. Lastly, Kuala Lumpur Kepong Berhad has proved its ability to invest in the company while also providing exceptional returns on invested money. Furthermore, considering that the stock has remained relatively unchanged over the last 5 years, there may be a possibility here if other indicators are strong. In light of this, it appears safe to investigate the company's existing value measures and potential. And that is all from us. Thank you.